When the economic environment becomes uncertain, we provide the truth from a breadth of perspectives to help people make decisions. We not only compile and analyze the data that moves our ever-evolving economy, we carefully craft our own to provide clarity across industries, businesses, and employment markets. We identify unique opportunities to deliver asymmetric returns and focus on capturing value created during periods of higher volatility, transforming the financial landscape together. We're MacroEdge.
Our team talks Canadian real estate and the cost and consequences it has on American real estate. I appreciate you guys bearing with us. The last 40 minutes has been nothing but test, verify, test, verify, test, verify. We finally have it rocking and rolling, and hopefully this sounds better than the previous connections. Turns out that my old boom microphone decided to die last week. This happens. It's part of radio reality, which is why it sounded a little bit tinny and a little bit off the kilter. However, we also have the ability to sit there and be reflexive and take action to correct the problem. Hopefully, this fixes the problem once and for all. We have a little bit of market data we'll hit while we're waiting on our guest, Daniel Foch, to join us. He is a Canadian real estate expert. I'll let him explain his side of the story, his history, his podcast, what he focuses on, and then we'll start hitting the hard-hitting questions relating to what's happening north of the border and the concurrent collapse on the U.S. side of the border and how those interactions are either going to be separated or magnified, especially relating to the Canadian currency, which I think is in a world of trouble. Starting with the markets, we had a Santa Claus dead reindeer bounce today, I guess, for lack of a better phrase. Dow up 339 to 42,732. Nasdaq up 340 to 19,621. S&P up 74. We'll round it up to 59.42. Russell 2000 up 37 to 22.68. Volume was heavy on the Nasdaq, meh on the NYSE, terrible on the S&P 500. The VIX closed around 16. What did I say before the holidays? Anything after the 23rd through the 3rd, you can pretty much ignore it and go with it. However, we're heading into the period when mom and dad come home. You better have all the beer cans off the kitchen counter and figure out somewhere to replace all the liquor you drank, because starting the 6th and 7th, the adults in the room return home and begin making real trades. Gold down $18, silver up 19 cents, copper up 5 cents in a nice bounce back rally. Oil rallied strong. WTI up 89 cents to finish at 74.02. Brent up 61 cents to 76.04. The Widowmaker continues to kill people and not take names. They just put your body on the side of the road like a possum. Natural gas at 335. I guess the world is not going to freeze and look like 2012 in 2 weeks, unless you live in the Midwest and the Northeast. Imagine that. Snow in January in those regions. We are going to bring Daniel Foch on right now, and I hope I'm pronouncing your last name right. Daniel, welcome to MacroEdge Radio.
Hey, thanks for having me. And yeah, you got my name right. It's actually pretty rare that people do. So congrats.
Yeah, well, some of us were stupid enough to study French instead of Mandarin and Spanish in college because I thought I would be in the Middle East or North Africa. So welcome aboard, sir. Please fill us in first and foremost about your blog, about your podcast, and about your background, just for our audience who's not familiar.
Sure. Yeah. So I read a lot about the Canadian housing market on I guess a bunch of platforms here, Substack. Do a lot of stuff on LinkedIn as well, and I also host Canada's #1 real estate podcast, the Canadian Real Estate Investor. Um, we talk a lot about kind of the structural issue behind what's going on in Canada, and whether or not there's an investment thesis to be built around the housing investment in Canada, and kind of what's happening with it, to the upside or downside. And yeah, and outside of that, as for work, I work as a real estate broker. at Canada's first AI real estate brokerage, and just do a lot of research for like developers, for realtors, just trying to help people get a better understanding for how to work with our incredibly volatile market over the last couple of years.
So you have a podcast.
Yeah.
Tell us how the reaction has been to the deterioration, well, at least from what I've seen from an outsider's perspective, of Canadian real estate, especially in the major cities.
Um, I think it's kind of a really good indicator of like the disparity that exists in Canada. And a lot of that was brought on by the housing asset. And I think you guys see something similar in the U.S. But there's like this pretty serious resentment towards like the landlord class or like investor class, and so a lot of people are really happy to see investors and speculators get destroyed. And I might be among those, to be honest, not for any other reason that like I just think it was kind of stupid. But I think there was maybe partial jealousy, like people were seeing uh others get like insane returns in Canadian real estate for a long period of time. And it was obviously going to come to an end. And it ended. The setup was very similar to what you're seeing in the US right now, where housing affordability as a percentage of household income was hitting record highs. The central bank was forced to hike. It pushed the housing market down very quickly in Canada. So there was a lot of people who were kind of cheering it on and saying, "Oh, I told you so." And then there's a lot of people who are just really, really in very bad positions. I mean, you're seeing, you know, uh, six-figure losses on houses. Majority of new condominiums being built today that were pre-sold to investors are cash flow negative, and so there's just a lot of people in bad positions, and a lot of capital tied up in those positions as well. That's really worth kind of worth evaluating. So I hope that answers your question well.
That actually answers the question perfectly because it sounds similar to what we experience in Florida about every 10 years. And we're pretty good at doing that, overbuilding,
Yeah.
over speculating, and creating a nightmare. So I'm going to dig into your biggest market first because my visitation to Canada is pretty much limited from Windsor to Montreal. And
Yep.
that was in a past life and a past business. What is going on in the Toronto condominium market? From what I understand, it's a disaster in some areas. I used to go to Mississauga all the time. I heard that there's some real issues in those regions. What
Yeah.
is really happening at this time?
Yeah. So basically, all of these units were pre-sold to investors. So like, I guess to contextualize it for a U.S. audience, the way that most of our buildings are funded is through like pre-sales. And so basically a builder will go and they'll get land and they'll entitle the land, and then they'll pre-sell units in a high-rise project, and they'll collect deposits from depositors, and then they can actually put insurance on those deposits. And once the deposits are insured, they can use it as part of their capital stack, so they can borrow against the deposits, kind of not against them, but like they become part of the equity in the deal, plus the value that they've added from the entitlement of the land. And then they'll go and get a construction loan from typically from like a big six Canadian bank or a handful of big six Canadian banks. And during COVID, basically, construction costs kept accelerating, capital costs kept declining, and so the willingness to pay for pre-construction condos just like jumped from, let's say, 1050 a square foot to like 1400 $1,500 a square foot, in some cases even higher. And the resale market went up a little bit, but not a ton. And basically, what happened was, um, builders were pricing in future gains, and buyers were buying them. So buyers were buying a unit in 2021 and saying, "Oh, this will be done in 2025 or 2026, so I can pay 1,400 bucks a foot for it because at the current year over year growth trajectory, it'll be worth it when I take possession." And they were wrong. They made the wrong call, and now those units are getting completed, and the majority of condos closing last year, 2024, and the majority of condos closing this year would have negative equity positions. So there's buyers who have to take possession of condos that they have negative equity in. uh, Banks are basically accommodating by lending against these in a way that they probably shouldn't be. So yeah, it's a mess.
So does this apply to single family homes also? Just curious.
Like not really. It did for a brief period of time during the single family pipeline is just a lot more agile, so it did apply. And like if you search, like there was some protests going on against one of the biggest home builders here in Canada, Mattamy, because like they didn't do anything wrong, but basically the buyers paid 2021 prices, and then by the time the house was built in 2022, it wasn't worth it anymore, and they didn't want to honor the contract anymore, and so they were protesting because I guess that's what they felt was the right way to deal with the problem. Um, and so your pipe the delivery and like the realization of the losses was just a lot tighter in that detached, because you can with single family detached, like ground based housing, you can sell a single house and then build it right away and deliver it, and so you'd realize any issue with the market within that, like let's say 1 year period, or maybe a block of townhouses, you'd sell 10 of them and then build them. But with a condo building, it's very different, because you have to sell 100 of them or 1,000 of them and then build 1,000 of them over, and that high rise it would take you 4 to 5 to 6 years to finalize that project. So the market risk is just 6 times as large, right? Because like you're, rather than being a 1 year period from pre-sale to completion, you're a 6 year period.
Well, this brings me to the next question. Has the Airbnb bust that we're experiencing in the United States on a regional basis
Yeah.
begun to impact your major markets? I mean, I know Vancouver, Banff, places like that. It's all over, same as it is in the U.S. But has the impact of the Airbnb speculators started to be felt or impact pricing, foreclosures, et cetera, in your major markets?
Um, Not really. Like, I guess the most recent iteration of it was in BC. I mean, our regulators, like Canada's not really as like capitalistic as the US, I would say. So a lot of our Airbnb stuff got regulated away prior to the market being able to kill it, to be honest. So like Toronto regulated Airbnb, so that we basically cut it up into either they have to be licensed. I think you're seeing New York doing this right now, but um, you either have to have a license, or you can do a minimum, or like less than half of the year, and it has to be your primary residence, or you can do medium term rental. BC just did the same thing. Quebec has done it. So I mean, there's kind of been like rolling phases of let's call it like legislative risk being realized on the Airbnb side. I think BC would probably be the only one that's like in an ongoing fashion seeing that happen. Um, where and then at a federal level, the government changed the tax structure on them, and they also hit them with like now you have to pay HST, like basically sales tax on your on the sale of an Airbnb asset. So there's been a wave of punches, but they've all been legislative. None of them have really been like market led from my perspective.
So that clears that. Now, the big question from my perspective, as you know, we have FHFA, the Fannie and Freddie situation, the GSEs,
Hmm.
backing almost all of our speculators in some degree to another outside of the large private banks and investors.
Yeah.
You have the individual mom and pops engaging in Airbnb investments, condo investments, etc. Do you have something similar in Canada? It's a question out of innocence and naivete, and for the audience, because we're not sure what's going on up there. So we're going to try and feel this out for our American listeners to get an understanding of how your system works versus ours. As I used to understand it, it was only the major banks that would do this. Does the government have any kind of system for investment like that?
Yeah. So we have it's interesting. It's a really good question. So we have a program called the CMHC MLI Select program, which is being used for the construction and purchase and like I guess make like rehabbing of apartment buildings. So that would probably be the most comparable to that would be comparable to your HUD program, I guess. Um, and that is that is government insured, and just for context, so it is your big six banks. They are, the loans are insured by CMHC, which is a federal corporation, the Canada Mortgage and Housing Corporation, and those loans you can get up to 95% loan to value, so 5% down payment. You can get up to 55-year amortizations, and you would have the cheapest interest rate in the market, by like 50 basis points, like cheaper than anything. So that's been kind of one of their solutions to trying to deal with the housing crisis here, and it's working probably too well, actually. Like if you look at Alberta, they've kind of overbuilt, and actually like are seeing a huge increase in vacancy in multifamily assets, like newly built multifamily assets. Like they went from 1% to like 7% year over year last year. And so like there's a lot of risk being realized there, similar to what you're talking about with those ebbs and flows, the shortage and then overbuilding, like the Florida market seems to be really happening in the Canadian market with that product right now. The government also just introduced a program where basically a first time home buyer can buy a property, and they can, or sorry, it doesn't have to be a first time home buyer. An owner occupier can buy a property with 5% down up to $1 million. They just extended that up to 1.5 million. And actually, sorry, it's not 5%. It's a reduced down payment, so high loan to value mortgage. That's insured by the government, and then they can actually also borrow money from the government up to 80,000 to add a second suite to the unit. So, like to put a basement apartment in or another unit or whatever, up to 4 units. And then they can refinance up to 90% of $2 million, so up to $1.8 million, if they basically build a house and add units to it. So, like these are, and so yeah, I would say we do have a ton of exposure to multifamily syndicators similar to the U.S., like insured exposure to multifamily syndicators, to small cap investors, to house hackers, and then you also get like Canada. I would say the bigger issue is like we don't really punish fraud like the U.S., and so people kind of just like commit mortgage fraud casually here, and so a lot of people are doing like the programs that I just mentioned to you. A lot of people are saying, oh well, if I can buy my primary residence with 5% down, and then now I've built some equity in it, I can borrow some equity and say I'm going to buy another primary residence and just not move into it and rent it out. And so I'd be willing to bet we have a lot more exposure than anyone knows, um, to insured mortgages of that nature as well in Canada.
Is this going to impact some of your big six banks? And I know who you're talking about with the big six, but do you see an impact on the big six banks coming down the road? And do you think unless the government changes, it will be deferred, the impact will be passed on to them versus the government?
Um, no, I don't think so. I think the government like really wants they would rather it ends up on the taxpayer, on the insurer. I mean, look, CMHC has made a lot of money over the last, like it's one of I think it's like the only government arm, or like government corp that actually like makes money. Like they pay, it's a revenue source for the government from making these insurance. And yeah, like sure they're in a losing position right now, but they haven't been for the past 20 years. And so I think that the government would probably be fine to see that risk be materialized on CMHC. And I think any politician, who's running in Canada right now, because we do have a likely election coming up in the new year. But um, any politician, I think, would probably be happy to see that, rather than see Canada's banks suffer a similar fate to like Credit Suisse or whatever happened there. Um, I don't like. I don't really think that the exposure to Canada's banks is actually too risky, simply because they're just heavily diversified. Like, I've done a lot of, like, I don't think there's anybody in the country who's done more research on this than I have in regards to the pre-construction condos and the risk that they have in being exposed to construction loans, and then also being exposed to the negative equity condos, the mortgages on the negative equity condos. Um, and frankly, like it's just such a small portion of their total book that, yeah, like I think they're more vulnerable to like the headlines where of like one of them being attached to like a, there's a project, like a really notable project here that was going to be the tallest tower in Toronto that went bankrupt. If their name was on that, like that would suck. But I don't think I don't think it's actually going to materialize in anything that will really shake up their stock price or like earnings or anything. They've already shored up a lot for loan loss provisions. I think the big risk for them is reputational and or like I, I don't think anything is a bigger risk uh, to Canadian banks than like the money laundering and mortgage fraud issues. To be honest, like I think that the this just like the condo stuff pales in comparison to how, because we just saw that happen with TD in the U.S. and I think that that's really the bigger risk for Canadian banks.
Well, before we go into the cross-border risk, one of our listeners, GBR, asked a great question. You mentioned earlier that Canadian banks were lending against the Finnish houses when they probably shouldn't be. Is anyone seriously stress testing the bank portfolios?
Yeah, so OSFI, like we have a regulator that basically oversees banking activity, and they basically put in this new thing where an entire bank's portfolio has to be no more than 4.5x the income of the borrowers of that portfolio. So basically, take all of the income of all of the borrowers and add it together, and then 4.5x that, and that's the max loan size that they can have on their residential mortgage book. So that would be kind of the one stress test mechanism but it's very income based. It doesn't seems pretty independent of equity. The other piece is like obviously we have this new wave of Basel III requirements that have come in for being banks of that nature, and it's fascinating because they've kind of been delayed and haven't really been enacted. And I it seems almost like foolish to speculate that the reason would be like for them to be able to do like a private sector bailout of the condo sector, but I can't really see another reason why they would delay it. But basically, I mean, you've got a couple of banks that are strong enough that they're basically just absorbing the risk, and they're actually lending to these borrowers. And my guess would be that the way that they're seeing it is, I know that this borrower probably won't be able to take this more like to compete with sorry, to go replace my loan with another lender after 5 years, maybe not even after 10 years, because they still probably won't be in a positive equity position. And so I think they're seeing it as like a loss leader. They're like, we'll take the risk today, but we know we're getting these borrowers for probably 15 years, right? Um, so yes, there's stress testing done by OSFI. I think it is kind of like it's kind of a look the other way thing, because it sounds like, I wouldn't even go as far to call it collusion, because I don't think it is. I think that basically everyone's just accepted that we're in a big pickle here, and everyone's kind of doing what they can to get the market out of it, and people are making some pretty big exceptions on what's appropriate in to deal with that scenario.
Let's go to the next question, because I saw that Calgary home sales were down 3%. That was the booming area as far as growth due to the oil industry and energy. Energy has been pretty much stagnant for several months now. Is that an area of concern for your markets and for your government as far as defaults, delinquencies, et cetera, in addition to the major cities like Vancouver, Toronto, Montreal, Windsor, et cetera?
Um, Calgary's been like pretty strong. Um, I don't even know if it's really because of energy, to be honest. I think it was just like it was the last affordable city in Canada, and so you saw a lot of people like just fleeing. It was like if you were a millennial who wanted to own a house in a metropolitan area, it, you know, it was either you were going. I wouldn't even call like Halifax or Moncton like metropolitan. I mean, Calgary even is a bit of a stretch, but that's, I think it was like really just an affordability thing. You were seeing just tons of people go to Calgary and to Alberta in general to be able to buy a house or afford rent. And there were jobs there, like, but their unemployment rate is as bad as Ontario's. Like it's not like a super gainfully employed province. So I think the the housing affordability piece was probably the big piece, because you can see the same trend going into Halifax. It just corrected more quickly. Same thing going into Moncton, like out on the East Coast. Um, yeah, so I don't know if that one was like, and I think the oil is kind of what's keeping it strong. Like the fact that energy is still pretty strong has saved it from correcting too severely. But I think it's just sort of they're reaching their own income cap again, where basically they're saying, oh, we can't afford, like even Calgary is unaffordable. I mean, from an investment perspective, like, you know, you can buy an asset at like a low five cap in 905 markets in like the GTA, and you would pay the same, like, or you'd get the same return for a property in Calgary. And so, like, the valuations relative to rent and relative to income, just they skyrocketed, and then it accelerated so quickly that it kind of just tapped out, I think, of what it's able to grow for this cycle without seeing some meaningful income growth personally.
Well, from an investor's perspective, this brings up another story that I happened to catch, and you put it in your feed. British Columbia imposing a 20% home flipping tax. Now, what happens to the individual? This is more for the American audience because I'm sure the Canadian audience understands this. But an individual who's forced to sell due to a loss of a job or due to a move or transfer, does that impact individual homeowners? Or is that specifically for investment, REITs, et cetera, investment groups that are investing in homes looking to flip for profit?
Um, yeah, so it would be individuals as well, but I mean, if somebody just moved for a relocation, they would be able to like claim special circumstances and not have to pay that tax. Yeah, so I think they're really just trying to crack down on, like, there's sufficient exemptions, and I think if somebody could prove that they had to move, then I think it would be fine to like, I don't think they'd be running up against that issue, right? Um, you seeing a lot of this anti-flipping behavior. I mean, even at a federal level as well. I mean, it's funny because it's not like it's not a ban per se, right? Like, it's just the government really just putting their hand out. Like, they're like, yeah, if you're gonna make money, we're gonna make money too. That's the part that I find funny, right? But anyway.
Makes perfect sense because it does seem that it's ripe for abuse. If you're up 40% and you have to pay 20% tax, it's no big deal. I totally get that. Um, well, the other question I have is business bankruptcies are ticking up in Canada. Is that beginning? And I just saw the story, business bankruptcies in Canada at highest level in 15 years. Is that starting to impact the economy at a larger level than what we're seeing here in the States?
Yeah, I think, like, from my perspective, Canada's like not like we're in a full blown recession. It's just masked by the fact that our government's been spending a ton of money, and we've been growing our population by like emerging market rates. And so it's easy to mask the lack of growth with just growing again the consumption base, like the number of people living here, and the amount of government spending, government hiring as well. So, like, they're basically majority of new hiring is government, so that masks it on the unemployment side. Um, the majority of growth has come from population growth. Um, bi- like, I think that on an individual basis, businesses and individuals are still suffering. You can see, like, per capita growth. We have, like, well, I mean, compared to the U.S., it's like it's laughable if you look at the chart. But, like, on par with the rest of the G7, everyone's kind of getting smoked because the populations are outgrowing the GDP, right? Um, eh, I would say that you're starting to see the knock-on effects of it, where you're getting to unemployment rising, you're getting to you know declines in residential investment and in household spending. um I think it's starting to look pretty recessionary here, and I think they're running out of runway to be able to hide it with, and tools to be able to hide it with, especially heading into a likely election in the spring of this year, at guaranteed election by October of next year. And if we start to see, like, the conservative government is pretty much guaranteed to win at this point. If we start to see them um, implementing kind of similar measures to what the U.S. is talking about with Doge, I would say that like that's kind of a lookout below moment for Canada, because that's the last thing that's been propping up our economy from my perspective.
Well, that brings, I'm going to shift over to the immigration question because you've had an extreme amount of immigration migration. Toronto, from what I've heard and talking to friends who've been there, is not the same town that I could walk through at 11:30 at night, grab a cocktail and then some dinner in Chinatown. It's not as safe. It's not as normalized as it was back to the Canada I was used to 25 years ago. So moving forward, what is the impact on home and rental demand due to the immigration and migration slowdown? It's a question that we're about to experience here, as I think we're going to have an immigration freeze at some point in the next 3 months.
Yeah, so I think that if you like, the Bank of Canada put out a chart that showed basically rental inflation beside population growth, and the correlation was visibly strong. I think that you've already seen this materialize in a decline in rental rates over the last 2 quarters, and I think the government acknowledged that trend and said, "Oh, we should probably try and take credit for this trend," and then they started to reduce immigration on paper. Let's say, like they started to make it sound like they were doing something, but the reality is, and if you look back to the 1990s, which was really like the last major cycle that we've had in Canada, we're kind of insulated against '08 because we just kept our leverage. We didn't really deleverage because we weren't in the same position as the U.S. So we just kind of kept that leverage growth train going, and we also discovered that addiction to cheap rates. So going back to the '90s, 1989 was the last time that Canada's population growth peaked, and it peaked at 1.4%. The first time we passed that was in Q3 of 2022, and so we just got back to that like population growth of that scale. What happened in the 1990s after that, though, was basically like everything was just so inflationary, right? And a lot of it was economic policy. A lot of it was that immigration. A lot of it was cheap interest rates and housing speculation. And the market just whiplashed, and people stopped coming to Canada organically. It wasn't because the government said, we're not gonna allow temporary foreign workers or whatever. They just left because the economic prospects sucked, and that's what is actually happening or has been happening for the last 2 quarters. It's just our data lags, and the government has basically said, "Oh, we did that," but the reality is like their policies existed for 3 months, and the data's existed for 6 to 9 months. So um, I would argue that it was already happening, and that you can see it on rental rates. House prices already kind of declined. I think that you'll see a continued erosion if cap rates hold. Then investment grade real estate should go down in value relative to rents. If vacancy rates climb, the same thing would take place. I don't think it had an immediate impact on house prices, and I don't know if it would in the U.S. either, because I think that like, and I said this the same way going up. Everyone's like, how come house prices aren't going up if the population's growing at the rate that it is? And house prices are measured in dollars, not immigrants, right? Like, and so it the the cost of capital and the availability of capital is all that matters. It doesn't matter how many people are trying to buy houses, right? So that's my perspective on it.
Fantastic. Thank you, sir. Real quick break here, folks. MacroEdge.net, Ozone, MacroEdge.net/Ozone. Get your 2-week free trial. Find out more. Read great perspectives and MacroEdge Resites. Do not miss that. This is how you learn what we're talking about. Subjects and great interviews like Daniel here. We want you to hear all perspectives. And we're going to get into the interaction on U.S. and Canadian real estate here soon. I wanted to find out more about what's happening now. And Daniel, that brings me to my next question. What about the affordability crisis? We are in a major situation in the United States due to the quote unquote Gen Z millennial class finding they cannot afford a home due to inflation and other aspects. What do you make of the affordability crisis in Canada, and how can that be fixed, in your opinion?
Sorry, can you repeat it? The question I just cut out there.
That's okay. We're having a problem with affordability in the United States,
Yeah,
as you probably know.
yeah.
And I'm hearing the same thing about Canada, especially if you're in the GTA, Montreal, Windsor, other large cities where, of course, people migrate to, Vancouver especially. What is the outlook for people to rent or own homes in those regions, or condos or apartments or whatever?
I think that like it's it's improving. I think you're getting to the point where like rents are falling fast enough and prices are falling fast enough that um, people are re-entering the market, like on both as tenants. Maybe kids who were staying at home and decided that they were going to save up money for and live with their parents for a little bit because it was so unaffordable. They're now saying, oh well, I can afford rent again because rents have come down probably 10% year over year in some of the bigger cities. Toronto mostly, like I would say your Montreal uh, hasn't really seen a ton of decline. But yeah, let's say Toronto. um, and then house prices similarly, like I think you're starting to see those people trying to catch the falling knives on the condo market, on the housing market, et cetera. Like, I think there's enough buyers that are sufficiently satisfied with the drawdown that they've seen off peak that there's appetite for people to re-enter. Whether or not I think that's the right move for them, I mean, it doesn't really matter. People are going to make their own decisions, right? And for buying your house is a very qualitative thing, and so it seems like that's what people are kind of leaning on. But in regards to the U.S., because I know you guys are seeing basically, I think right now the housing unaffordability is as a percentage of median household income is higher than '08 or '06, I guess is when it peaked, but not as bad as the '80s because that was when you guys had 18% interest rates. Um, and so the setup would look very similar to we saw that happen in 2022, right? Q1 2022 is when we hit our peak, and we're rolling down the other side of it in a recession, even if it's not a technical recession. My guess would be you'd have a similar consequence um, happening in the U.S. The only structural difference, is that your resale market isn't as responsive to the changes in equity or interest rates because you've got so many people who bought with 30-year winning the lottery mortgage rates, and their payments are fixed at pretty reasonable and manageable numbers, and so they're not like, well, those people aren't incentivized to really sell or move or do anything, right?
That brings up the question, because you've answered the question about the youths, you've answered the question about that, but the Bank of Canada actions. Right now, the Canadian loonie is looking like a 150, 160 potential, almost like the yuan. Are there concerns about too rapid of a depreciation of the loonie from the Canadian investor perspective?
Yeah, I would say so. Like, I think that people are really concerned seeing what's happening with the Canadian dollar relative to the USD. Um, I think that contextually it doesn't hurt as much when you look at what's happening in like the eurozone, or the pound or the euro versus USD. I mean, the USD is just incredibly strong right now. It's not. I don't know if it's like, obviously Canada could do better to have a stronger dollar relative to the USD, but it's not that bad globally. I mean, it's so I think that there's definitely concern because we're the geographically incredibly close. A lot of Canadians go and vacation in the U.S. A lot of those trips to Disneyland or Florida or whatever are definitely going to be a little bit more painful for Canadians this year. But I think the bigger concern is also the trade balance, and the fact that, I mean, where we stand right now, we stand to be impacted more by imported inflation than we stand to benefit from getting a increase in exports because of our dollar being weaker. I think it's fascinating. Like, I had a conversation with a really big home builder in Toronto recently, where they were saying they're actually marking their construction costs up to a 6% year over year growth for some of the materials, because you're getting Canadian suppliers who are literally just going to the U.S., selling their materials to the U.S. because with the exchange, the U.S. buyers, it's cheaper for them to buy from Canadian suppliers and pay the logistics costs. So that was a fascinating knock-on effect, and like kind of a first sign of imported inflation that I've seen as a result of a lot of it, even though it's kind of a backwards.
Oh, you still there, Daniel? Oh, we seem to have hit a speed bump. Well, I tend to agree with his outlook. Hopefully, he'll be right back with us. It sounds like a cell just went offline here real quick. If you take a look at what's happening, and the loonie is really technically in very bad shape, and I think Daniel will acknowledge that. Um, he is, well, we're trying to restore it here. This is our usual problems with X. It could have been an X problem, so I'm not going to sit there and say it was Daniel's issue on his line. All of a sudden, I just saw it drop, and I'm afraid that is what happens, folks, with this X Spaces situation. Daniel, you still there?
Yeah, I'm here. Can you hear me? Sorry, my
You sound great. That's okay, man. We're so used to X Spaces being glitchy, we sort
yeah,
of grown into it. You know what I mean?
yeah, for sure, for sure.
Okay. Well, this brings up the question: when if the liberals lose the government completely, is there going to be a major impact on either interest rates or government spending that could affect your real estate market?
Um, I think that yeah, there's probably a couple of different ways. So I think that the biggest one is like, I mean, if we're gonna get a more pro oil government, you're probably gonna see a little bit more demand for Canadian dollar just simply because it is still a petrodollar and people have to use it to buy Canadian oil. And so that would give us some stability. I think it might give a little bit more faith in the country being serious about business compared to our current administration. I think that you might see it might be tough because it's not a populist play right now, and like Pierre does seem to be a bit more of a populist. But I think that getting rid of the foreign buyer ban could be on the table. It wouldn't surprise me if the existing government honestly just didn't renew the foreign buyer ban. But that one, because like so technically, if you're a U.S. investor, you want to buy real estate in Canada, you can only buy uh, buildings that are outside of census metropolitan areas, so like in basically rural areas, or um, buildings that have more than four residential units. So basically, non Canadians are prohibited from buying residential property with less than three units in metropolitan areas. Um, so like you could see some changes in that regard. Um, Otherwise, I mean, oh, and I guess the government spending was the other one you asked. I don't know. Like, I think it really remains to be seen. I mean, Pierre's he's been in the government for a long time. I'd be surprised to see him be a small government prime minister. To be honest, I think like I'm like personally, I kind of more fascinated with like libertarianism, and I look at a guy like Pierre or Trump's first term. They like Trump spent a lot of money during his first term, right? So and I know they're all talking now like they're going to stop doing that, but I would say it remains to be seen, and I would be surprised to see. I don't think he will spend nearly as much as the liberals. I mean, it would be very hard for somebody to do that again, but I don't think I don't think it's going to be like cripplingly low. I'm look. I would love to see a period of austerity. I think Canada needs it, but then like I would love to see kind of like Malay style economics and approach to Canada, but because like, I just think we're so bureaucratically bloated. I don't think our country will do it, and I can't see. I think I like it wouldn't surprise me if if part of Trudeau's strategy was a lot of this hiring to make Pierre more and more of a villain if he had to lay off a lot of those people to downsize the government a little bit. I just think that they'll likely take the foot off. Like they might start with some downsizing, but I think that they'll likely take the foot off the gas once they get some pushback for it and people start to realize the economic consequences of what they're cheering on right now. That's just the vibe that I get because I do think they have a bit more of a populist approach to it.
Well, I'll follow up with that with something else that's similarly related, and that is the Trump situation where he's talking trade war with all of our allies And after what happened with Canadian lumber in his first term, which was an absolute nightmare for those in the construction, yachting, any industry that is affected by that, what do you think the perspective is, not just from the Trudeau government, but from Pierre, of the potential of a trade war based on whatever is flying into Trump's soup that day and sparks his interest? Because the instability of a consistent trade policy, especially after all the new treaties, is of some concern to all of our allies, from what I understand.
Yeah, I would say like, my I think that my guess is that it'll probably go like it does kind of seem like posturing from my perspective, and it'll probably go similarly to the way that the tariffs did during his first presidency, in which there was a lot of exemptions and Canadian businesses had no problem really continuing trade the way that it was prior, with some exceptions. Um, I think that the scarier part from my perspective is maybe the economic setup, and that might make tariffs a bit challenging. Where I mean, I think like the Great Depression is a good example of where you saw a pretty severe stock market crash, and it was followed by tariffs and a trade war. That to me is probably the harder waters to navigate from the tariff perspective, where you've got like .com bubble valuations in the market right now, and you're talking about that type of economic policy. I think it's just going to be a very difficult one to actually execute if we see some material pullback in the um, in the stock market. But I stock market's not really what I'm an expert in, so I'm just kind of regurgitating data that I've seen on here.
That's no problem at all, sir. I don't think anybody in the United States is a stock market expert either. We have a tendency to sit there and throw darts, have a few beers, and call it a day. And don't get me started on hockey. I don't want to pick on your teams, considering I'm a Lightning fan. But I'm going to ask the big question early because this is going to take some time to sort out. I know you've got 10 minutes left, and I appreciate all the time you've given to our MacroEdge audience, folks. We bring great guests like Daniel on every week to try and give you an education on what's happening, not just in the American markets, but what affects North America and the globe. Let's move on to Canadian real estate and its impact on what's happening with the tourist regions. Now, for those who are not familiar, folks, Arizona and Florida are huge vacation home holdings for Canadian residents. And we're experiencing the beginnings of another one of our cyclical crashes in Florida. I can tell you from firsthand, I go out and take pictures, I go out and look at it. Daniel, is there concern about the impact of a Canadian real estate contraction coincident with those second vacation homes? What happens when forced selling occurs in both markets?
Yeah, it's funny because like I've just seen so many Canadians like lately that like as soon as the Canadian investment thesis was no longer real estate only goes up, they just started like peddling Florida condos or whatever it was, right? I mean, a lot of it was Florida, although you'd see a lot of your Vancouver realtors doing Arizona and like California and whatever, like wherever they. I mean, it's crazy because it's really not that hard to calculate a return on a property, but everyone's like they really are only just peddling the markets where they can say, yeah, this market grew last year, so it probably should grow this year, right? It's like, well, that would actually say that if it grew last year, it's less likely to grow this year. But anyway, um, I think that what you're saying is probably a likely outcome for a lot of the people who in who kind of got finished with Canada's real estate market and started piling into the other other real estate markets. Like it's super likely that they would probably be exposed to two stupid investments rather than one. Um, I think that that should happen. Like I think that my most hopeful outcome would be that people that we see exactly what happened in the 90s take place, where people who shouldn't be investing in real estate are no longer investing in real estate. I mean, I think you look at so many baby boomers from Canada who in the 90s got caught and smoked, and everyone was losing money, and nobody wanted to touch the real estate asset in Canada for an entire generation. Like you can't there I would say 80% of baby boomers think that real estate is a bad investment in Canada. To be honest with you, maybe that's a little bit overstated, but let's say 70%. But then you get these two new generations where they haven't seen a downturn. They haven't seen they haven't seen haven't personally lost any money in downturn like what happened in the U.S. or what happened in Canada in the '90s, and they all just feel invincible and like they've discovered this whole new thing. And I don't think we're done this cycle until those people don't want to invest in real estate again. So if they have to pile into Florida or Arizona to do it, like I would say let's encourage them to keep doing so.
Well, that goes forward to not just the casual investor, shall we call it, for being kind. Let's
Yeah.
go to the people who are semi-retired or about to retire who were able to invest in a second home in Arizona or Florida because that is the meat of the second home market from Canada. What happens when you see things like I'm not sure how familiar you are with the condominium situation in Florida, but right now,
Yeah, I'm pretty familiar with it.
then you know about the assessments that are about to hit
Yeah. Yeah.
now. And if they sit there and come up with these huge assessments and they're into forced selling there, is it going to trigger forced selling in your markets, in your opinion? Or is it just an unknown that we'll have to evaluate and determine over time?
I would say it's probably it's too small of a factor. Like there's definitely exposure, but it's not big enough to move the market here. I mean, you'll see a bit of a negative wealth effect, but it would be the same level as like if what you're saying is going to take place takes place, which I agree with you. I think it's very likely. Then people will have less money and they'll they might need to liquidate an asset here. I mean, the same thing is true of Chinese capital, where Canada's got a ton of exposure to China, and we have a lot of foreign direct investment in real estate from China, and China's market is basically exporting deflation, and their housing market is collapsing or did already, and so you were seeing a lot of forced selling via negative wealth effect there. Similarly, like you kind of get some people running away from China's market, and you get a bit of a flight to safety. So it could kind of balance out in that regard. I would say the exposure is probably there. I would say you're probably more exposed to to correction in the stock market than you are into like Florida's housing market or the U.S. housing market versus Canada's market. Canadians just like I don't for the most part, I don't think there's a ton of wealth that is investing in U.S. markets enough that like a correction in Florida would impact Toronto, but I could be wrong.
Well, the reason I ask that is there are a lot of, just like we have here in Florida, obviously, a lot of speculative fervor by the wealthier side of the ledger that says, okay, I'm going to buy 5 homes in Florida and 3 in Toronto, et cetera. And at some point, somebody's going to be wrong, especially if they choose the wrong regions. And I wonder if the government will back them on the Canadian properties, but hey, you're on your own in the U.S., which it would be normal and justified, in my opinion.
Yeah, I mean, like on the lenders, yeah, I guess for sure. Like, but I I don't know if the banks really would like will care all that much. To me, they are just small. Like they're pretty small losses. And I think that the recourse environment in the U.S., like if you're a Canadian bank lending in the U.S., you'd have to be more comfortable with like a non-recourse situation, anyways, right? Whereas in Canada, like this is the big challenge. Is in Canada, like they can follow you around for the rest of your life if you default on a loan. Whereas in the U.S., there's a lot more non-recourse products, right? In order for them to be competitive in the U.S. market, they kind of have to take that risk anyway.
So they actually are tracked for the rest of their life, future investments and earnings to sit there and pay back, if I'm understanding that correct.
Well, like if you don't do uh, consumer proposal or bankruptcy, yeah, like that. The like we have full recourse loans here, right? So and this is honestly I think a big reason why Canada's market was able to spiral so far out of control is people are like the banks are underrating the borrower, not the asset. They don't give a shit whether or not the asset is valued properly. That's like honestly like they aren't they have no intention to take it back. Whereas in the U.S. they can take it back and sell it and realize the loss and move on, right?
Incredible. Absolutely incredible. Because that is similar to what we see down here where they just go on the speculative future value of an asset, give out the money and say, good luck.
Yeah.
Whereas you're telling us in your country, hey, you're the idiot that took the loan out. You better pay it back. And by the way, we'll be collecting at your funeral. Amazing to hear that.
Yeah,
Uh,
yeah,
Daniel, I appreciate that information because I was not aware that it was full recourse in Canada Now, does that apply to corporations extending to individuals or only to individual investors?
It would depend on the situation, but typically a corp, if it doesn't have corporate credit or like a strong enough corporate guarantee that can be borrowed against, the lender would require a borrower to put a personal guarantee up for a corporate loan.
Oh boy, what a great idea. Pardon that. I know that right now there's some regional banks in Florida that were thinking, what a great idea. Uh,
Yeah,
because
for sure.
we're asking for a disaster down here, that's for sure. Well, fill us in one more time. One more question. The devaluation of the yuan, which we have predicted here on MacroEdge, we see it
Yeah.
coming. Is that going to have an additional secondary impact on British Columbia real estate?
Yeah, it could. I think that my guess would be that most of the damage is done by the negative wealth effect of China on BC and Canada. I mean, like Toronto's just as exposed, I would say, like the 905 in Toronto. So just outside the ring around Toronto, there's a lot of Chinese capital there as well. I think that so. There's two things. So the first one is a lot of that was limited by the two foreign buyer taxes and the foreign buyer ban. So if we kind of rewind a little bit, 2015 there was like this big expose that came out about how much Chinese capital was playing in Canadian real estate. It was actually a lot of the research was done by our now superintendent of financial institutions, Peter Routledge, when he was working as an economist at National Bank. If you ever get the chance, just Google McLean's China is buying Canada. That was the article. It's still up. And after that, the BC government put in a foreign buyer tax of 15% or 20%. I think it was 20%. And then that was in 2016. And prices dropped. I mean, luxury real estate in Vancouver still hasn't recovered to those values. Might never, to be honest with you. Like, so 2016 was the peak for your kind of like detached luxury market in Vancouver real estate. 2017, same thing happened in Toronto. Because of this, all of the capital literally left Vancouver and just said, okay, well, you're not going to be respectful to us. We're going to go to Toronto. And then Toronto had I think it was like a 30% growth year, 20 high 20 or 30% growth, and it was all same thing, like luxury properties in the 905 suburban areas around Toronto. Um, Ontario put in, so a couple of the lending policies came in, the stress test B20, and then Ontario also put in this foreign buyer ban, or sorry, foreign buyer, what was it called, non-resident speculation tax of 15% that was later increased to 20% a year later. And in April of that year, 2020 or 2017, prices in like some of the luxury markets, Ontario, Aurora, Ontario, Oakville, Ontario, they dropped like 20 to 30, high 30s% within a year. And a lot of your Chinese capital got burned during those markets and kind of fled or settled after that. There's a little bit more, but the COVID run was like a lot of it was domestic buyers, a lot of it was first time buyers really pushing up the market. And so there, I think their exposure is limited, and I think a lot of it has already come out in the wash through the negative wealth effect. I would say, to answer your question, because still haven't, probably yeah, it could have a little bit of an impact, but I would say that most of the impact has already been realized by China's economy suffering and the myriad policies that Canadian different governments in Canada have done to kind of dissuade Chinese investment in Canadian real estate.
Daniel, thank you so much for your time this hour. We
Yeah.
appreciate the heck out of it. Thank you for taking time out of your busy day and accommodating all of our X Spaces radio issues. Folks, we will have all the information for Daniel, links, everything that you need. He's provided a great insight, and we really do appreciate giving us a different perspective we do not hear. Next week, Lawrence Leopard to talk up his book, to talk about Bitcoin. Boy, there's a subject that I'm probably going to sit there and create a bit of a stir about because, I'm not exactly the biggest Bitcoin honk there is in the world. However, where Lawrence and I do agree is on gold, silver, and other hard currencies. Folks, macroedge.net/ozone, macroedge.net/ozone. Go there, get your 2-week free trial. Until next Friday, January 10th, where I think the markets might be a tad more interesting. This is John Galt speaking. Good night now.